Okay, so the second option when it comes to funding a Douglas J development project and how it can be something that's beneficial to both you and us. In this option, you're not required to bring the full amount of capital that's required for the deal. In fact, we leverage a very solid relationship that we have with a hard money lender to bring the majority of the capital required for the project from the purchase and also the renovation at a very aggressive interest rate that's competitive with all the marketplace as far as what hard money lenders are lending. We have some of the best relationships in place, and one in particular stands out, whereas we are getting rates, less than 10%. If you don't know by now, interest rates, if you're borrowing hard money, 10% is kind of like the most you'd be wanting to pay if you're an experienced investor. If you're getting charged more than that, let me know. I could probably help you out, get a better rate, by the way. But at the end of the day, we're well below that. And so most of the time, of course. And so we leverage that relationship to fund the majority of the deal. Now we do introduce a new expense into our profit and loss called interest expense. So that does reduce our profitability slightly. It also adds a line item to our balance sheet called, loan payable to a hard money lender, which is pretty sizable typically. It's like I said, 70, 80, 90% of the whole deal. And so that's something we have to pay back that gets paid before we disperse any monies to anybody involved in the project. But fundamentally, what's great about it for you and someone you might know, if you forward this video to someone you have a relationship with, is that there's an opportunity to bring a lot less capital to the deal and still have the opportunity to joint venture with us in a very similar way to what we described in option number one, where you are not having to lift a finger, literally. Now, not to say you can't communicate with us. Now, we wouldn't communicate with you. We definitely will. We definitely do. But I'm just giving you an idea here that it's not required. So it makes it very simple and convenient to have your capital be put to work in a great real estate investment project, a fix and flip project, a value add project that's basically forcing appreciation to occur in the real estate, and ultimately a proven model that we've had from doing dozens and dozens of flips over the years. And so this is all I do, by the way, is fix and flips. And also we have a wholesale business and other things we do in real estate. But fundamentally, it's what I do. It's my job, essentially. It's my role. It's my responsibility every single day. And so you can leverage our experience, our credibility in the marketplace, the access to opportunities that we have by taking your capital and putting it into our projects and essentially forming a relationship that way. And so we've done that successfully many, many times. And we're looking to do more of that with folks to help us grow our footprint of opportunities, because actually there's a lot of opportunities that we can't do simply because we don't have the funding ready to go right when we need it. We have, we're juggling cash flow all the time. And so the more access to capital that we have, i.e. folks like yourself that are obviously involved in real estate or looking to become involved in real estate and have a relationship with us, we're looking to do business together. And so contact us after seeing this video, or listen to option number 3 also, which might be of interest for you. And we can help you with option number 3 as well. We'll talk about that in a second. But fundamentally, if either one of the first 2 options sounds good for you, definitely don't hesitate to reach out to whoever sent you this video, or reach out to us on our Facebook page, or however you communicate with us on our email or text, wherever you want to reach out to us. I'm happy to talk to you further about all these options, okay? Stay tuned for option number 3.